I passed this 100K funding challenge in just 6 days. No cap.
But you see, we're just ripping. Oh my goodness, we're ripping.
I'm out. All right, we're good, chat. We're good. No luck, no guessing, just one repeatable strategy that I've used to gain over $1 million in funding. And I'm gonna show you the trades, the strategies, and how you can use it to apply it to your challenge starting this week. The challenge I went with is the Apex Trader Funding Challenge. The challenge costs about $60, and then to activate it once passing costs about $140. So in total, it costs about $200. So $200 for 100K in funding in just 6 days. In order to pass the account, you need to hit a 6% target and you have a 3% total drawdown. That means I can't lose more than $3,000 on this account, and I'm looking to make $6,000. Every trade that I take, we're looking for consistency, not aggression. So we're going to be taking trades at a 0.5% risk. That means we'll only be risking $500 on each trade. Now, you'll see how I start to scale it up, and I'll show you how I do that once we actually get in profit. But starting the challenge, we always start with 0.5% risk. That means we would have to lose 6 times in a row in order to lose this challenge. Okay, so my strategy is very, very simple. We want to trade from 9:30 to 11:30 Eastern Standard Time every single day. We don't want to trade outside of this time because we have a ton of volume in this session consistently, and that's what we're looking for, is consistency. So what we want to do is we want to dial down to our 4-hour and get our 4-hour direction. Is the 4-hour bullish or is the 4-hour bearish? In this example, you can see that the 4-hour time frame is in fact bullish, and this is our 4-hour candle that is forming in our session time. And the key thing that we're looking for our 4-hour direction is volume.
We got a ton of volume coming into this 4-hour. If this next 4-hour candle can continue, we can see that continued bullish move.
Right? Volume is what's going to drive the markets, and that's what's going to offer us the best risk to reward trade. So if we have that bullish volume, as you can see with this 4-hour candle breaking above these key highs, we can anticipate that the next 4-hour candle continues pushing with volume. So how do we go about this? You want to dial down to your 15-minute time frame and then get your 15-minute time frame key zone. What do I mean by that? So on our 15-minute time frame, we will be seeing higher highs and higher lows getting created based on the 4-hour being super bullish, right? So what that would look like is, you can see here, you can see that price created a high, created a low, and then we have our 15-minute candle closing above a key area of interest. That is going to be our key zone, this key high here, right? So once price closes above that, we want to scale in on the next 15-minute candle, anticipating price to continue pushing, right? So how do we do that? Well, it's going to come down to our 5-minute plus our 1-minute candle signal. So we use the 5-minute and 1-minute in conglomeration in order to get our perfect signal candle, right? So what are we looking for? We want to see price break and close above a key area of interest on the 5-minute, and we want to scale in on the bottom wick of the next 5-minute following the breakout. So you can see down here, we in fact closed above this area on this 15-minute time frame. Well, how that will look on the 5-minute is this 5-minute candle closing above that area of interest. That is going to be our signal once we close above that area, but then we need to wait for our 1-minute candle entry, right? So on the 5-minute time frame, it would look like this, but on the 1-minute time frame, it would look something like this. So we have 1, 2, 3, 4, 5 candles right here. This is our 5-minute candle here. We need to wait for the first 1-minute candle to close bullish after we get our 5-minute candle close. So we just had our 5-minute candle close above our key area of interest here, and then we wait. Why we have to wait is because this wick price should form a pullback wick, right? And so we want to make sure that we're in at the lowest point of that pullback wick. We don't want to jump the gun early. So you can see that we closed as a bullish candle here. Then the first candle, bearish. We wait. Then the second candle, bullish. Once that candle closes bullish, that's when we want to scale in. After that candle closes bullish, and then you want to set your stops below that 1-minute candle low. And so what I'll do is I'll set my stops below this low down here of our current 5-minute candle and anticipate price to continue pushing bullish, right? So then what do we do next? The only other thing that we have to do after price closes bullish is move our stop loss to break even at a 1-to-1 risk to reward. We'll cover how we go about our targets and how I actually scale out of my positions. On average, our trades run about a 1-to-3 risk to reward. We move stops to break even at the 1-to-1 to protect us from a possible reversal at the 1-to-1, because from there, we want to see price just continue pushing with volume in the direction of our trend. Okay, so the first trade we're going to be looking at here is the NASDAQ. So on the NASDAQ, you can see that on our 4-hour time frame, we were extremely bullish coming into the session, right?
Hey, we might be taking a look here at this NASDAQ for a possible continuation.
All right.
Yeah.
It already retested.
Yeah, it already retested. We just broke through this high here. So as long as for within this 5 minute, we could this next 5 minute candle close or this 5 minute candle close bullish. We'll see how the next 5 minute gives us.
So coming into the session, we are at just closed above this area. You can see this rejection that we had, and we're starting to break out through this area here. That is great. So now we dial down to our 15-minute time frame. You can see just how bullish our 15-minute time frame was here. You can see it closed above our key area of interest here, and it broke above these highs as well. So what did we do? We dial down to our 5-minute time frame. So on our 5-minute time frame, we want to wait for that 5-minute candle to close above our key area of interest. In this case, this was our 5-minute candle that closed above our key area of interest there. And then from there, we scaled in on the first 1-minute bullish candle following this 5-minute candle close and look to capitalize on like a 1 to 4 risk to reward.
Okay, close bullish. We got a weak rejection. I'm gonna take a buy right here. But you see, we're just ripping. Oh my goodness, we're ripping. Cause I was trying to, yeah, it just didn't work out the way. All right, I'm out, chat.
Okay, the other trade that we were looking at, and this is the trade that actually passed my account here on gold, right? So on gold, you can see our 4-hour time frame closing above this key area of interest. We got a correction and then a continuation. We were looking to ride that continuation. This is what I was talking about on our 4-hour time frame. This is why it's so key to look at our 4-hour time frame direction. Let's go to our 15-minute time frame. So on our 15-minute time frame, you can see that our session starts at 9:30, right? So 9:30, we get this bearish candle to the downside for our 15-minute. Well, that's not our signal candle, right? We already have broken above this area of interest, but that happened prior to our session. That's not our trade. We have to wait, right? So we come into session, our first 15-minute candle closes bearish. Our next 15-minute candle pushes into a key area of resistance, and then let's dial down to our 5-minute time frame to see how this actually reacted. So from our 5-minute time frame, the first retest within this session, you can see we retested this and then we showed a sign of exhaustion here. This rejection is a sign of exhaustion. And then what did I do? I waited for my first 5-minute candle to close bullish and look for that continuation. I think that that's what we're going to get here. And so what I'll do is I'll set my stops below this low down here of our current 5-minute candle. We still got 2 minutes left until this 5-minute candle, well, 1 minute and 30 seconds. Once this 5-minute candle closed bullish here, what do? You already guessed it. We scaled into the first 1-minute candle following this 5-minute candle bullish closure. I'm in on buys. Stops below the low, looking for price to target up to the high. And then we just look to ride this, and I closed it up here at this resistance. And this is the trade that actually passed me this account here. And I ended up actually taking this trade on 2 different accounts, and this is a recording. I'm in on buys. Stops below the low, looking for price to target up to the high. All right, hold on, chat. We getting close. Let this say 1900. We out of there. Make sure I'm still above. I'm down. I'm out. All right, we're good, chat. We're good. All right, I'm out of there on this account. That's just to pass this account. I am holding on another funded account as well. What really helped me pass in 6 days wasn't just the strategy. It was being consistent to my rules. So no over trading. I journaled every trade. I traded only in my session. And this would allow me to pass this account. You don't need a complex strategy. You need discipline and one setup that repeats over and over and over. This wasn't about being perfect. Like I said, I had losses too, but by being disciplined to this system, I was able to pass my account very, very fast. So if you're trying to pass your challenge, take this video as a blueprint. And if you want to see my full 9-step guide, I have a free PDF in the link down in the description or comment blueprint and I'll send it to you.